15th edition of the Roundtable. How are you doing, Honor, in this dire time in the market?
I'm glad you asked. GM, welcome to the weekly roundtable. I'm not AI. No, just kidding. I'm good. How are you?
Doing all right. I mean, I just had a bit of spot exposure left, so like not too affected anymore by stuff. I mean, of course it's annoying, but like if the losses are not real if you don't open the app. So may it be
So,
Bank or the
y-
last remaining Binance account, or yeah. I mean, it's a weird point in the markets. I think there cases can be made for either outcome for the bull market to be over or for this to be the last final dip, which is similar to either what we've seen in 2019 or what we've seen in summer 2021. Very uncertain. I just before this podcast watched a video by Benjamin Cohen, who I think always does pretty like nice on-chain analytics stuff mixed with a little bit of fundamentals, mixed with a little bit of TA, and I think he always has a very sober stance. And he's basically 60-40 that the bull market is in fact over. But yeah, I think I'd recommend everybody to watch that video. I think he has a lot of good indicators that he's pulling. And he's also not too deterministic about stuff. So he acknowledges that the number of observations we've had through previous cycles is very limited, and this time can in fact be different because these cycles are not deterministic themselves. So yeah, pretty tricky. What do you think?
yeah,
Gun to your head as we cycle over.
God says yes.
Hmm.
God says it's over. The
How
prophecy
many
has
how
been
many
fulfilled.
dairy products did you consume over the last days so that your gut is saying that?
Very few. I think I'm lactose intolerant, so I barely consume dairy products. But no, what I want to say is like reasoning by historic top signals. You know, this website, Bitcoin Glassdoor or something, where they have these like 30, 40 top signal indicators. None of them hit. So clearly, if the cycle is over, we've entered a new era where these metrics don't work anymore. And you know, if we keep overfitting these models, what's the point of the models in the first place? So I'd rather just like try to read the market as opposed to predict it. Secondly, obviously sentiment is bad, so I wouldn't bet the farm on it. It's just like a gut feeling, and the prophecy has been fulfilled. Bitcoin hit all-time high, you know, which is the most important. I think all the numbers that were thrown in the room were wrong. There's reasons for it. Um, I think 60-40, I would even say 70-30 for me, 70%. Oh, yeah, 65-35, 65 over 35. I do want to see what happens in December. That being said, though, because we are, like, let's assume the cycle is over, right? Because we haven't hit any peak signal indicators, clearly the dynamic has changed, which means I don't think it's going to be 2 years of pure blood and down only. I think like there's going to be many cycles in the next couple of months, and there's going to be like mini metas. So I'm just like on the outlook to see what happens in the market.
No, I think that's reasonable. That's also one thing that was discussed in the Benjamin Cohen video, that it's a more institutional driven cycle, and especially looking at all the social metrics you can use to gauge whether there's a lot of hype or a lot of desperate sentiment in the markets right now. It's definitely on the latter side of things, and the closest parallel to that would be the recovery rally in 2019 before COVID happened. And if we exclude the wick that was created by the COVID dump, it was roughly a 50% retrace from I think the 13 or 14K high back then. So that would set us back somewhere in the 70 to 60K range if in fact the market cycle is over. And I also don't think that we will see 70-80% retraces, at least not on Bitcoin. Um, this time, if in fact the cycle is over. For Ethereum and Solana, I could imagine that we'll go back to like pretty bad lows. I don't think we would make new lows on either of that. I don't think that Solana will go back to $10. Nor do I think that Ethereum is gonna go back to below 1,000. As of now, like there's no strong case to be made. Of course, you cannot exclude it, like if there's some super long tail event happening, but I don't see a particular reason why it should. But I can see a scenario where these L1s will struggle to accrue economic value to their token in the future. Where, yes, all of these theses are correct that open source software creates like exponentially more value in economic value of the stuff that is being built on top of it. But just with the internet, you cannot monetize the HTTP protocol, nor can you monetize all of these internet standards. And Solana and Ethereum are a pretty close comparison to these open source standards. They're not a perfect comparison because you still have the underlying like native token as a gas component. But in order to make these things more usable, you need to reduce gas fees in the future. I just listened to a pod with I think he's the head of ecosystem at the Ethereum Foundation on the Edge podcast that is run by DeFi Dad. And I think he made a pretty bullish case in terms of adoption for Ethereum. And they're also planning to scale the L1 further. But none of these things, as bullish as they are from an ecosystem expansion perspective, will directly result in value accrual for Ethereum. And I think on the Solana side, you can make a very similar case.
Okay, you just threw a lot of words into the room, which I'd like to comment on and unpack a little bit. So I think the comparison between Ethereum and Solana and HTTP is not a good one. It doesn't make sense to me, because if you think about like these low-level protocols, they enabled the creation of Web 2 as we know it, and apps like Facebook, Instagram, WhatsApp, whatever, Amazon. So we have these rich applications built on top of the lower level protocols, right? And obviously all the value capture happens on the app layer. There's nothing HTTP, Tim Berners-Lee, or whoever you want to give credit to, captures. However, I think there was a time where we thought about crypto and blockchains as the fat protocol thesis, but it essentially only solves one problem, which is the Byzantine generals problem. Basically, a problem that open, untrust. What is the state of truth? Can you actually trust? In a closed system, it's easy. Like I just say, I'm the authority. These are my machines. If you trust me, then what I tell you will be correct. Think of like Visa, MasterCard, your bank account, Stripe. That's like a trusted system. You don't have the Byzantine generals problem there. But in a permissionless, decentralized system, there's malicious actors. So people have an incentive to actually lie and rig the game, right? That's why you need blockchains. That's why you need civil resistance. That's why you need fees. That's why you need to solve things like double spending. And that is very different from HTTP. And I think the core use case, anything you can think of as like a central registry that needs to give you information about the state of like the state of truth, so to speak. So how much money do I have? Which one is the correct hash for this information? Like, think about like in the era of AI, who tells you that this person actually said that? Like, is there some on-chain proof that the person owns, that the person kind of signed? So for any sort of like central registry that gives you verifiable information, and you can verify that that information is actually true because there's a giant computer network that's verified it, there's been fees that were paid, then blockchain comes into play. HTTP is not that. HTTP is just like the first version of the internet where anyone built applications on top of it. Now we could argue whether this created with blockchains is sustainable, is feasible, makes sense, will survive. That's all kind of up to debate. But I would disagree that Ethereum or Solana are similar to HTTP. I think they're very different use cases.
Yeah, I mean, the only comparison I wanted to make is that just as for HTTP, everything kind of runs on it, but there's no direct value accrual to it. There's nobody who really owns it. There is a chance that a similar dynamic will develop for all of these L1 coins, which remain relevant. Um, I totally acknowledge that there are some differences, but we would have to shift away from purely pricing businesses on a kind of revenue and like quantitative monetary metrics, and we would have to appreciate more the network power and kind of network metrics for Solana
I'll give you an
and
example.
Ethereum to stay at these prices and to continue upwards.
So I'll give you one more example, right? The difference between HTTP and, to your point, Solana, Ethereum, that actually extracts rent for posting on those chains. So Meta or Facebook is a for-profit company, and you trust them that whatever is on your feed is true. It's generated by you. But think of like Facebook as a permissionless decentralized system where anyone runs the servers, anyone runs the nodes. Then that trust goes away. Like you don't know who created your feed, if that information on your feed is correct. And for that, you need some sort of like crypto or blockchain system that has, private public key cryptography. I can verify that you signed this, you paid fees, it's verifiable information on your feed, right? So anywhere you have a trusted counterparty, you don't need blockchain. You don't need blockchain. You just like have a centralized cow that you milk, so to speak. But whenever you create a market for anyone to provide their resources, that's when you need blockchain. And that's why I don't see a world for a blockchain where you have some underlying layer that doesn't extract rent, because like it would need to be a new design to solve the Byzantine generals problem. I don't want to go too technical, but that was kind of the breakthrough, that proof of work or Hashcash or whatever you want to call the first Bitcoin mining algorithm, that it solved. And you still need to solve that for blockchain applications. And if there's no fees, I mean, maybe someone will create this in the future. I just don't know how that solution would look like today. So I think that comparison is like, I don't know, to me right now, with my understanding, it doesn't make sense. But I guess we're too deep already in the weeds.
Yeah, I mean, there's a bunch of other stuff to discuss today. Maybe in terms of the cycle changing, do you have a strong opinion on individual sectors of crypto being dead for good? Maybe particularly memes, because that's kind of your horse in the race versus me.
No, that's kind of the least that is dead for good. Like if you would say DPIN, if you would say RWA, if you would say layer ones, if you would say layer twos, I would say we can discuss all of that. But the one thing that is for sure not dead, I think, are memes. Like memes will always come back. Maybe it takes 10 months, maybe it takes 6 months, maybe it takes a year. But I don't see a world where that goes away. It will change in shape and form. Like, the pump fund style extraction, I think, is obviously not sustainable. But memes in general, like especially seeing Dino Coins moon that are literally memes. I think the shape and form will change, but I don't think it will go away. So I'm more bullish on memes still than on random DPIN or any other, like you pick the technology that's been hyped for a couple months.
For memes, I can hardly envision a scenario of them coming back. I mean, nobody who was willing to buy them a year or 18 months ago still has any money left, because memes always appealed to the long tail of retail. And if it's very crypto native retail, they lost all their money in crypto. If they still make most of their money in, let's say, the real world and also live in a Western nation, they got completely crushed by rising living expenses. So nobody has money left to bid any of these things. And of the remaining kind of degen participants in the retail sector, they're all trading US stocks and 0-day to expiry options. That was the only kind of means of speculation that compared to the 2021 cycle did not decrease significantly. Whereas crypto kind of got left behind as the most favorable casino to participate in, particularly because there just was no limit to the extraction schemes that other actors could play. And I don't see how we will make these people come back. They have polymarket, bet on stuff that they're more emotionally attached to, like sports games. And if they want to do purely financial speculation, why not speculate on the stock market? I mean, the S&P and the Nasdaq, like pretty much every asset class has outperformed crypto this cycle or this year.
Yeah, I think we all know the reason for that. But okay, so we can agree on the following: the pump fund meta of launching random coins that will all go up 20x is dead, and it's probably not coming back. The widespread Murad meta, like must stop Murad, of this is a meme coin cycle, or memes are going to go 20, 100x, I think has been falsified. When I say memes are dead, it's like, of course there will be the next fart coin that doesn't make any sense and is a pure meme and will go to billions. I'm 100% sure. Like, that will not go away. That doesn't mean that 5,000 other coins will also do the same. I think that's not going to happen. So even if you look at like previous cycles, all the way from Namecoin, Dogecoin, Shiba Inu, every cycle there was at least one main meme runner, and this cycle it was Filecoin. So if you tell me next cycle there's not going to be a meme runner, I would say probably there will be. But in general, I think what's very agreeable is this, like, oh, we're going to have a portfolio or like a pumpfolio of memes and they will all do well. Yeah, I agree. That's probably over.
Yeah, I mean, of course, there is like the sector of meme coins, and the ability to launch memes and people launching memes will not disappear to zero. But there's no meme coin super cycle or whatnot to any extent. Like, it's quite interesting because I think back then when we started discussing memes, I still remember when we were at EFCC in Brussels together last summer in 2024 on that bus ride to Modular Summit. We were talking about memes quite a bit, and where you kind of meme pilled me back then. And I was on the financial absurdism and financial nihilism trip since a few months before that, but I never made the connection to memes. And I think now all the kind of base inputs into financial nihilism and like the average person struggling in the economic system. And I think if you look at Zoran Mamdani winning in New York, and just like the political landscape, the economic landscape, these are all very, very clear indicators that financial absurdism and financial nihilism is hitting one all-time high after another. But it does not translate into these instruments which we thought would capture financial absurdism at all.
Yes, and why is that? So when we spoke about that, I'll give you my explanation. When we spoke on the bus, we were actually like, we had decent timing because things went up from there. Things went up significantly from there. So if you would have taken my advice, I don't know if you did. I'm just joking. But I mean, I think a few things that are like that weren't accounted for in previous cycles, in my opinion, is there's three main things, and this is not rocket science. One is Trump. Like, what the fuck is going on? He launched a meme coin, then Melania launched a meme coin. They all like were pure asymmetric information extraction schemes. Barely anyone else other than insiders made money. That was like the first top signal. The second thing is, especially on Solana, the level of sophistication when it comes to professional tooling and professional schemes to extract, right? Like launch, hype, pay tax, create a Twitter account, create some fake accounts, hype this thing up for 2 days, extract as much as possible, kill the thing, rugged. It's insane. It's 99.9% of the assets, literally. And then the third thing is go to CoinGecko, go to CoinMarketCap. Previous cycles, you had how many coins? I don't know, a couple thousand maybe. This cycle, you have a couple million. So even if there was no extraction and there was no Trump, assuming the same amount of money, it would still need to distribute to an order of magnitude more assets. So I think these are the reasons why this assumption was not true and it didn't happen. And that's concerning. And that's why, I think for the meme coin cycle, I think Pump is a super interesting business model. But individually for the meme coin cycle enjoyers, I think it wasn't that negative.
For sure, yeah. I mean, even most of the Murad coins, the ones that actually went to high market caps, I think they were launched outside of Pump, if I remember correctly.
Mini was the only. Yeah, Mini
Coin launched via Pump or
Pump, yes. Murad coin list, Mini was the only one. Mini was the only Pump, and then Farkman was also Pump. But these were all Radium version of Pump, not Pump Swap, which is another thing. Introduction of Pump Swap and creator fees, it changed the dynamics so much. You are incentivized to create as much volume as possible between 500K and 2 million, because that's when your fees are the highest, right? I know there's a table, you can do the math. So I'm down for the experiment. I just think you also have to acknowledge that these things failed and we have to move fast and move on to the next thing.
Moving on to the next thing, what's the state of privacy coins? Do you think that Zcash is just being crimed up, or do you think that there's a lasting shift of focus towards both privacy coins but also privacy tech in crypto? And do you think that there are any fundamentals that back it, or any macro developments, or is it just a last gasp of a narrative before everything is starting to go down again?
I mean, I don't know if I'm the best person to talk about this because I have a very sarcastic view on that. But for me, it's definitely being crimed up. So you may want to be in on the crime, nothing bad against that. But if you look at the system, Foundation wasn't doing well before. There's clearly been some blue chip, high value people take over. The narrative is being pushed overnight. It's not the most used privacy system, privacy coin in the world. Monero has way more usage if you actually want to be private. If you shoot the transactions on Zcash, you're actually going to have problems depositing into exchanges. Monero has been delisted from exchanges for a longer time.
On Kraken. Annoyingly, since I use Kraken a lot, it's the only centralized exchange that I still regularly use.
Yeah.
I didn't buy Zcash, I bought Monero over the summer. So instead of riding a nice 15x, which would have pretty much saved my portfolio over the past couple of weeks, I'm up 30% or 40% on the Monero position. So yeah, that's pretty frustrating.
Okay, I see. No, so here's the thing, I like Zcash. I minded. I minded when I had an equihash farm, and I like the project. I like privacy in general. I believe in it. But if you look at the details with shielded versus non-shielded, what's the usage? There's a tax on Zcash. How is the tax being used to fund the development? It's a very non-cyberpunk design, in my opinion. It's a very centralized design. So maybe that's cool for some people, but if I would over the next 10, 20 years, and by the way, I do agree, the last 1,000x in crypto is probably in privacy. But yeah, I would, you know me, so I don't have to repeat the same thing, but I'm definitely in the Monero camp.
Yeah, funnily enough, Andrew Tate, out of all people, started talking about zero knowledge proof. So I think that's a very indicator.
If Andrew Tate speaks about ZKP, if that's not a top signal, I don't know what else is.
I think they should add that to the Glassnode top signal list. But I agree that privacy is kind of one of the last fields with asymmetric upside. I think a lot of the other ones, the RWA coins, the DeepIn coins, I don't think that these sectors are dead. I do think that there are some projects that will come out of it. I mean, Syrup is a great project in terms of DeFi and RWA and like real world assets being brought on chain. You have Helium, the mobile plan provider in the US, they're consistently growing. But of course, the prior valuations these tokens have received, purely based on hype, are now catching up to the actual underlying numbers and fundamentals. And there are fundamentals, there are numbers, but they are obviously at a much lower multiple than where these coins were previously trading at. So I think
I want to comment on one more thing. Sorry. Finish.
Sure, go ahead.
Okay, so I don't think it makes sense to look at any sector in isolation. You look at each sector with the context of macro environment in mind, right? So, for example, if RWA, DeepIn, and privacy would do incredibly well, and meme coins, NFTs, and something else would not do well, then I would say, okay, like that's a clear signal of the market deciding. But given we've been down only, except Zcash, for a couple of weeks now, I think it doesn't make sense to like pick any specific sector and say, oh, this sector is dead. It's just like everything has been down only for the last 3 months. So why do you pick this one specifically?
Down much more than others. I think if you compare the whole, I still think you can make up a good basket of shorts and a good basket of longs in crypto and pair trade that. If you look at all the sort of revenue generating and like fundamentals backed coins, I'm not saying that these things will go up from here, but definitely they will go down less from here compared to some of the other ones. If I think it still makes sense to short a bunch of the kind of vaporware L1s and L2s that, I mean, a lot of the L2s have actual adoption, but just nothing of that adoption is going to accrue value to their token, and they have to use their token to incentivize liquidity and other activities on DeFi. So I think you can short these. You can still short some of the older memes like Doge or Shiba, and against that you can long a basket of the revenue generating ones where you can put stuff like Syrup, Aerodrome, Hyperliquid into it. I think there's like one or two things on Solana that also generate decent revenue. Like again, this is not a like 10x outperformance from here, but if you want like a decently risk-adjusted pair trade, I do think it makes sense to be opinionated about individual sectors. Like it doesn't make sense to be like, I mean, yeah.
Let's start, we don't have to talk the talk. We can start the simulation. Let's start the trade game.
There's pair.trade where you can set up a pair trading basket.
No, not with like real thing. Let's just start a spreadsheet or something. And you just put like 5 positions in there. I just put 5 positions in there. And then we just like look at them over time over the next couple of weeks. I'm not saying like I'm going to do well or anything. I'm just saying like will be fun. It would be fun to do that.
Yeah, we should do that.
Let's do that for next time.
Yeah, similar to the BTCD bet that we've taken a few months ago, which as of now is looking pretty well for me because BTCD is almost back up at 60%. So
can you remind me of what the exact bet was?
The bet was that you were in favor of BTCD dropping to new lows, so dropping below 40% until the end of Q1 2026. And if it drops below 40%, it basically takes the lows of the 2021-2022 cycle.
So let's take that also into the spreadsheet, and then let's add like a few more things and observe them.
Nice, yeah. So we dropped down to 57%. That was mid-September. And ever since particularly after the October 10 crash, it's been on a consistent rise upwards. I still think it's going to drop because I do think that it is more likely than not that the cycle is not over yet. So I still bet on an alt season to some extent. I just do not think that it will be to such a huge extent that it will make new lows compared to last cycle.
What would the new low be?
The new low would be 40%. That's the one you were betting.
So you're saying, I mean, I don't fully remember. So what I was more referring to is we're gonna see a new low for this cycle, not compared to last cycle.
Well, there has been no low this cycle.
I know, but this was kind of what I think I had in mind. I was like, whatever the low this cycle was, I think we see another low.
There was no low this cycle yet. The peak this cycle was just a few months ago. It was like late June, early July. That was at 65%. So we were just when we made that bet, I think it was somewhere during July or August. We have not even made any low for BTCD throughout the cycle. Like this was prior to any low happening.
Okay, yeah, makes sense. We can leave it as is.
Yeah, but yeah, maybe let's just on the privacy coin topic. I'm not overly opinionated about Zcash. I definitely see the case of it being crimed up and kind of collectivized pump and dump scheme of some large old holders, etc. I don't think it makes sense to think about that a lot if you don't have any kind of unique insight into it. Might make sense to hold a little bit, might make sense to trade it, but like I think it's a waste of time overall. But privacy as a whole, I think in line with the fundamentals of financial nihilism picking up again, I also think that capital controls in Western nations will be a much larger risk over the next couple of years. Similarly, for any types of privacy infringements and kind of crackdown on financial sovereignty. If you look at the demographics of Western nations, if you looked at the debt to GDP and like also at the absolute numbers of government debt rising, I think they're all in very precarious situations. I don't think that any of them, not a single one of them, will manage to get out of these situations in a smooth manner. So there will definitely be a lot of crackdowns. You see redistributionist politicians rise, both in the US, also in Germany. If you look at the revival of the leftist party, so I think there is a very strong incentive for anybody with decent amounts of net worth to put that money into BTC, into ETH, and like it doesn't have to be super privacy focused, but at least put it into something where you are kind of the sovereign over your own wealth. And I think that is right now, out of all the potential catalysts, the most bullish one that I see for crypto. I consider that right now much more relevant than any quantitative easing or quantitative tightening ending. I consider it much more relevant to interest rates dropping, because for the people to whom these macro factors matter, they already have access to the asset class, and they've had access to the asset class for the remainder, like the most part of this year. There's been a much more friendly regulatory climate. Of course, there's still a lot of stuff to be done, but I think for BTC particularly, if you wanted to get exposure, you do have exposure. So I think privacy is definitely rising. For example, I think a week ago there was an announcement by the Bank of England that they want to impose a £10,000 or £20,000 limit per person on stablecoin holdings, because they're concerned that it's going to threaten the business model of traditional banks. Then in 2026, I think there has been some sort of financial reporting alliance between actually quite a large number of countries where they will share account data to centralized crypto exchanges with the domestic tax agencies to which their users belong. And if I remember correctly, that even includes some of these prior financial and tax haven countries like the Caymans and Bahamas, etc., that will start sharing data. So I would deeply urge everybody to move as many of their funds on chain as possible. I think maybe we could do an episode or like a video on how to properly do that. I'd recommend most people to close their centralized exchange accounts, maybe like keep one or two open, some well-regulated one like Bitvavo or Kraken that you use for on and off ramping. But other than that, just try to be as on-chain sovereign as somehow possible. I think we are up for some rather dark times. I also don't think like the initial fear and like the initial reason why Bitcoin was created was primarily the business banks, and like also if you look at the creation of new money supply and kind of inflation that Bitcoin was meant to fight against, it's majority the majority is created by business banks. But I don't think that business banks are the issue here. It's central banks and governments, because business banks cannot force you at gunpoint to comply with anything. It all comes down to governments and the only non-regulated entity or central banks. There's nobody regulating central banks. There's nobody regulating the Bank of International Settlements. And it's kind of weird because these topics were so much more present in 2023 and 2024, but now nobody talks about it anymore, even though the actual numbers and the fundamentals have become exponentially worse ever since. And I do think that this will revive and this will bring back more attention to crypto.
Yeah, commenting on two things. You need to do. You're talking for 8 minutes, and I have like so many things I want to comment on. So on privacy, I think the simple version is: you think 10% of crypto market cap can be captured by privacy? That's kind of like the main idea here. Like, can 10% of let's take Bitcoin. Like, can Monero and Zcash capture 10% of Bitcoin market cap? That's the high-level thesis for privacy. I think the answer is yes in the long term. On the other thing, yeah, like I think it's called DAC 8, DAC 8 regulation in the European Union, at least from 1st of January. Pretty severe. Like now there's an automatic transmission from centralized exchanges, payment providers, credit card providers, and whatnot. If there are citizens of the respective European countries, those information will just like be transmitted automatically. Which, I don't know, like I don't have a strong opinion about that, but it's if people previously haven't taken care of their taxes or their financial situation, could be a bad surprise.
No. Do you know if there's any initiative to make Bitcoin itself more private on a chain level?
I'm not following BIP's Bitcoin improvement proposals. There's definitely proposals who attempt to enhance the privacy of Bitcoin, but I don't know what the state of the latest is and how far ahead it is. But by design, Bitcoin improvements are going to be very, very slow. And I think that there may even be a world where privacy for Bitcoin will happen on a layer 2. But I'm not sure. I don't know what the latest is. But that's the thing. Like, you could like, I mean, depending on your definition of privacy, but the easiest thing you can do is take your Bitcoin, swap them to Monero. There's like a couple services like Thorchain or Shapeshift or a couple other decentralized services. Do a couple of ring signatures, do a couple like Monero transactions, leave the money there for a while, and then like slowly move it out to Bitcoin again through decentralized services. And there's like basically no history, no trace of where that Bitcoin came from, other than it coming from Monero, like it being swapped from Monero. So if that's not enough, I don't know what you're doing. Maybe you are running some weird shit.
Yeah, I think if it's just to preserve financial privacy, and if you're not like a 7 or 8 digit crypto holder and or conducting swaps at that size, just doing the basics to get off of centralized exchanges and swapping once through either a mixer, using stuff like Railgun, or swapping through Monero or Zcash will do the job just fine. I don't think that there's an incentive for these financial agencies to crack down on like the long tail of retail, not because they don't want to, but simply because they are too stupid to do so.
No, it's I think it has to be worth it for them, right? So if an agent spends a week on this and their salary for a week is, I don't know, 10K, 5K.
10K.
I'm overly optimistic, right? Let's say 2 weeks and it's 5K. Like then, okay, like what sum are we talking about here? Are we talking about 3-4 million, or are we talking about like 17.6K? If we're talking about 17.6K, it's like they can maximum spend 1-2 weeks on it, and then that's probably gonna not be worth it. But I think for the bigger fish, I can see a world where it's worth it. And also, I wonder how like the initial settlement will be, because I do think that for many people it will be a bad surprise when they get notifications about crypto transactions that they didn't report. And assuming that will happen to millions in the European Union, there has to be like a, I don't know, famous last words, I guess. But like in my mind, there has to be some simplified process for the first year or so where it's like, hey, like here's the bucket, just put everything in, and we're gonna like simplify the processing for the first year. But if it's larger amounts, like 50K plus, I think then you're for sure in trouble.
To be frank, I think most people are net at a loss on the retail
Yeah,
side.
but this is the thing,
annoying
like,
thing with these three-letter agencies is that they will very quickly accuse you of being in profit or only looking at your profitable transactions that they can find. And it is quite a burden to prove to them that you're actually at a loss, especially, for example, I mean, if you've been active for the past, let's say, 6-7 years in that industry, you've probably cycled through a dozen different centralized exchange accounts with various of these entities. You probably have a dozen or 2 dozen different wallets across different chains. Like, unless you have tracked all of these things in with these back then still very imperfect accounting and tax tools, it is, I don't want to say impossible to recreate the transaction flows, but like, yeah, it's a very like disgusting ability of these agencies to kind of force you to waste probably weeks of your work time to compile these transactions to essentially prove that you're either break even or at a net loss.
yeah, that's why I think it would be much more fruitful, but it doesn't mean that they're going to do it, to have like a very simplified processing for history. Again, assuming it's below 50K. But to your point on losses, okay, I agree. Like on average, people are probably losses, but maybe, and this is the worst case, they didn't harvest them. So maybe they didn't realize the losses, but they realized profits. So they have like dry income on paper. And because they didn't realize losses, they didn't carry them on. And because they didn't report them, they didn't carry them on to consecutive years, which means the worst case scenario is you have net losses, but because your transaction flow wasn't optimal, you may have tax liabilities that you have to pay for profits that you realized. And anyways, like there's all sorts of situations like that. I think in general, like tax knowledge, I think in space is not ideal because you can use it as a tool. Like if you have losses, you can use it to your advantage. So I guess we have to see what happens. But in general, like, yeah, centralized exchanges, first of all, not your keys, not your crypto. So they're honeypots, so you shouldn't have much there anyways. But secondly, like, if you at least like rotate your wallets, so there's not like one wallet that exchange interacts with, but you have maybe like a handful or a dozen, yeah, that's a good start. Yeah. But I'm generally curious to see what's going to happen.
No. I think maybe people are overly concerned about it, but I mean, I don't have sufficient insight into these agencies to judge whether this is a priority item for them. If they want to make it a priority, I think they could make the lives of people unnecessarily very difficult. But to be frank, in the whole kind of world of tax evasion strategies, I think that crypto is pretty irrelevant, especially on the retail level. If you really want to use crypto for money laundering or tax evasion or whatever, you're probably sophisticated enough that they won't catch you anyway. And if you're doing this professionally, you're very likely not going to do this while having your primary residence in Germany or like any EU country. You'll probably do that while being, you know, with your main address or your business address in the UAE or the Caymans or like any of these well-known tax havens where there is no incentive to really crack down on you. So I think this, if this is getting prioritized, it would be a huge waste of time and energy, and it would just make people hate their governments even more, which in the mid to long run is bullish for crypto. But yeah, it's just tremendous waste of time and everything else. Maybe to pivot to something more optimistic here. So Uniswap last week has finally published, or kind of officially published, their fee switch proposal, so that a part of the Uniswap fees generated by the protocol will go towards Uni token holders, which in the past was always a big issue for Uniswap and also most of these other OG DeFi protocols, where you had a lot of numbers and fundamental metrics in terms of adoption, in terms of DVL growth, that were in favor of these protocols and these projects, but you never had a causal connection to their tokens. So you could hold the Aave, the Uniswap, Compound, whatever token, but you could only use it for governance. And since a lot of VCs, a lot of team members, a lot of OG whales still had the majority of tokens, they would also dictate the government's votes, and they would coordinate. So the bull case for these tokens was always pretty limited. But now this might change, especially with the proposal coming from Hayden Adams, who is the founder of Uniswap himself. So there's a high likelihood that it got coordinated with like the other initial investors into Uniswap Labs, where most of the fees were accruing towards previously, and also coordinated with a bunch of large holders. So I think if this is going live, it will have a high likelihood of passing. And another good thing is that as a part of this, the labs entity will also stop collecting fees on the Uniswap front end. So until now, if you were trading through Uniswap on the Uniswap front end, you got charged an additional, I think, 0.25% on every swap, which would go to the Uniswap Labs entity. And yeah, I think there are going to be some interesting dynamics between the Uni token holders and the LPs. So I don't think we are yet at a stage in DeFi where we have figured out a perfect business model or revenue sharing model between the actual LPs or the actual lenders versus the token holders. So until now, you had Uniswap on the one extreme where all the fees went to the token holders, and something like Aerodrome, Velodrome, and like all of these voted escrow free dexes on the other end, where you had to lock your tokens, like the proprietary tokens of the dex, with like a respective time lock. Usually the maximum was 4 years to maximize your voting power. And with that voting power, you could dictate the sort of bribes or like the fees towards any liquidity pair of your choice. So yeah, I don't think that there's any perfect model discovered yet, but like, do you think that this is relevant for the majority of DeFi, or is it kind of a drop on a hot stone?
Hard question. I think it's relevant, but it's changing so fast that I think we have to see what exactly happens. I could see it being more related to macro and cycle dynamics than actual like DeFi regulation or anything like that. But I mean, it is definitely relevant in my opinion.
I think the largest relevance from it comes from the fact that Uniswap is still one of the OG DeFi protocols. I think if some more modern one on the lending side or on the DEX side would have done this, it would have been kind of a nothing burger, because these younger ones, especially if they're not domiciled in the US, whereas Uniswap is sitting in the US, I think in New York, there's also less regulatory risks of trying to do that. But I do think that if Uniswap, which is a rather, from a legal perspective, conservative entity, pushing forward with that, I do think that sets a good precedent for Aave, Compound, and a lot of other DeFi protocols to follow suit there. And that could reignite, or at least make the revenue accruing DeFi token bull case a little more tangible. And yeah, curious to see where this is heading. In other news, we also just saw, probably it got announced over at DEF CON in Buenos Aires, that Aave is going to launch an Apple App Store app where you can tap into the lending products and earn yields on your US dollars and maybe on some other assets. I think, again, like, not a 0 to 1 innovation. To be frank, just developing a mobile first front end for a crypto app is nothing revolutionary. It's not like some quantum mechanics or whatever. But I still think that mobile adoption is an underrated instrument for growing the user base of these established DeFi protocols. If you look at how liquidity behaves on Uniswap, how TVL behaves on Aave, and on many of these more established ones, they have a very good quality of the average user, but they are still lacking quantity. So I think now, with like quality users being established, they're not going to like suddenly move anywhere else completely with their funds. It does make sense to try to discover new strategies, how they can appeal to retail folks, and I think mobile is a very good path to that. I still don't see a world where within the next 1 to 2 years most of the high value transactions in crypto would take place on mobile, but everything that goes into the direction of trying to replace banking and banking apps, that is going to compete with the fintech neobanks like N26 or Revolut, and anything that is attached to kind of a more prediction market, retail heavy side. I think mobile is going to be the dominant interface being used for at least the quantity of transactions. So yeah, I think it's a pretty healthy step by Aave to do that.
Yeah, no, makes sense. I agree with everything you said.
Nice. Speaking of stablecoins, we also have Figment.
I have to drop here. Maybe we keep this for another time. Sure. But we're at the hour, and
we can do it next week.
Perfect. Thanks, Max.
All right. Thanks for joining. See you next week.
Cheers. Speak soon. Ciao, ciao.